how to regulate our nervous system and use the performance state that we have. That's what we're going to look at today. So we're going to combine the stuff that we've learned so far. If you haven't watched the other episodes so far, don't worry, you can still follow this one just fine. And I will send you guys a link to the playlist of the other episodes. If you want to catch up anytime. Give me 1 second. There we go. This playlist contains all the episodes we've done so far. And yeah, let's just dive right in it. I think we're like 5 minutes past 11, so we'll just start out. So yeah, as I said, we're going to look at nervous system regulation and performance state. So up to this point, we have analyzed the psychology of trading from multiple perspectives, right? We have explored dopamine in the first part. We explored fear. We explored the ego. We explored identity. We explored self-sabotage, right? But none of these operate in isolation. Every trading decision is executed inside a specific biological system. And that system is the nervous system that we all have in our bodies. And the key principle for this entire section is you do not trade based on what you know. You trade based on your current physiological state. Right? If your nervous system is very dysregulated, the strategy you have kind of becomes irrelevant, right? Because our nervous system is going to force us to do actions that we don't want and are probably not in line with our strategy anyway. So today we're going to understand how that state determines performance and how we can regulate it. So let's start off the nervous system and trading. As I talked about before, trading activates a very specific ancient circuitry inside our body, right? Our nervous system is evolved to survive, right? When danger is there. It's evolved to recognize predators, to recognize social threat, to recognize resource scarcity, and to understand when there is uncertainty, right? At the same time, it did not evolve to handle leveraged financial exposure or rapidly fluctuating digital numbers that we look at, which could be seen in the P&L, right? Or just volatile global markets as a whole, right? But at the same time, yet your body does react the exact same way to it, right? It perceives these things as threats or as resource scarcity or uncertainty, right? When we see a losing position, heart rate starts to increase, our breathing starts to change, maybe our muscles start to tense up, right? And perception therefore starts to narrow down. I see someone else already said, heart rate up for sure, anxiousness, nervosity. It all happens. So this is the sympathetic nervous system starting to activate, right? It's our fight or flight response. And the problem is, whenever we see a red number, like in P&L, or a big candle that's going against our trade, it's not a tiger. but our brain does treat it like it's a tiger, right? Like there's imminent danger. So our body runs in two dominant modes, right? We have the sympathetic and the parasympathetic systems, right? And the sympathetic system, that's our fight or flight, right? And it's when we have a lot of adrenaline, cortisol runs through our body, a high rapid heart rate, very fast decisions, impulsivity, and narrow thinking. We covered this more expansively in one of the earlier episodes, but basically this allows you to make very fast decisions that are based on survival whenever you are in a dangerous situation, right? And then we have the parasympathetic mode, which is regulated and controlled, which is slower breathing, a stable heart rate, a wider perception. It also includes longer term thinking and inhibition of impulse. And optimal trading requires controlled activation. Not total calmness, but also not extreme high stress, right? Regulated alertness. That's what we need in trading. So then we get to something called the performance curve, right? This brings us to the Yerkes-Dodson law is what they call it. And it basically talks about how performance follows an inverted U-shaped curve. And this inverted U-shaped curve, we already talked about it twice in the cortisol episodes, where I talk about, having a little bit of cortisol in your body is actually helpful because it does help you make sharper, make better decisions based on risk. But having too much basically erases all the positive effects and only leaves us with negative ones. And in this case, we're going to be looking at quote unquote arousal in a sense of activity. When there's too little arousal, right? So under arousal, it's boredom, right? You're going to be forcing traits that aren't there because you're kind of bored. And focus is going to be low because there's nothing really exciting happening. So, then we have too much arousal, right? Which is over arousal. And that basically leads to impulsivity, panicking, revenge trading, over trading. And these two are zones that we kind of do not want to be working inside of, right? So where do we need to be? Inside the optimal zone, which is being regulated, right? It's a moderate arousal, so to say, where we have a calm focused, we're engaged, but not emotional. And a mistake some traders make is assuming that calm is always good, right? But it kind of isn't, because under arousal leads to basically stimulation seeking behavior, right? When, let's say, there's a chart or a day, a chart that's like incredibly boring, like sideways price action going up and down, and there's nothing really happening. That's the environment and the time and place where stuff will happen, where people start to see things that aren't there and start to force trade, right? Because they're there at the charts, they've been watching for like, let's say, an hour. It kind of leads to bad behavior as well. And over arousal leads to emotional override, right? Where our emotions start to take over and we can no longer think rationally. And this is where revenge trading comes from. And the goal is not eliminating emotion, right? Because it's not possible as a human. We can never eliminate emotions. However, we can regulate intensity. That's the goal. Because the thing is, usually or with a lot of people, their nervous system is very dysregulated, and negative emotions usually aren't welcome. And with that, I mean, people often do not like to feel stressed. They do not like to feel the feeling that they have when they take a losing trade or they do something that's outside of their plan, because they might feel shame, for example, or they might feel angry. And people do not want to feel that way. And as a result, their body will start to basically do things to get rid of the emotion as fast as possible, right? Like overthinking, or in the case of trading, forcing trades or revenge trading in order to basically seek that stimulation and get rid of the emotion as fast as possible, because we are just unable to sit into discomfort, right? And actually acknowledge the feelings, actually feel the emotions, right? So let's look at some physiological warning signs, right? Because before most bad trades, our body will actually kind of signal us, right? But a lot of traders, they kind of ignore the signals. And, what are these signals? Well, common warning signs could be like shallow breathing, or your heart rate increasing, like we talked about before. Or maybe your jaw is very tight, a lot of shoulder tension, or a tunnel vision is a very big one. And the urge to click, the urge to open a position, the urge to want to get in because you see something happening, the inability to wait just 5 seconds before acting, right? Because you feel like I have to do it now. And these things, these warning signals, they're not random, right? They're basically indicating that lower brain systems are gaining control over the other ones, right? Because the body will always shift before the mistake happens, right? And the mistake is basically just a downstream effect of that, right? So it's very important to note. So then we have emotional capital. Some people that I've talked to privately or have spoken to me before, they know I often speak about having mental capital or emotional capital and protecting it and all that kind of stuff. You could basically view it as like RAM memory on your PC. professionals often refer to something called like the emotional capital, and the emotional capital that we have is the internal regulatory energy that we have, right? Just like financial capital, it's limited, right? And that capital starts to decrease after large wins, large losses, very long trading sessions, poor sleep, stress in your personal life or in work life or whatever, when being in conflict or being very, overstimulated due to anything. And when emotional capital is low, right, risk tolerance starts to become unstable. And it's also the same time when patience starts to decrease, right? Impulsivity starts to increase, and decision fatigue sets in, right? These are all things that we do not want while trading. Does this sound familiar to anyone? Let's hear it. Let's see. Too familiar, definitely. Definitely familiar. Yeah, it's something a lot of people have, and the thing is, this is not applicable to just trading, right? You could basically apply this to everything that happens inside life. Could also be normal job work, could be relationships, could be anything. This is like universally applicable, basically. A lot of the stuff that happens here. Yeah, Tony says I talk a lot about mental capital and that we need to protect it. Yeah, we definitely need to protect it, and basically, um, be aware of it, and how it works. Exactly. That's why you can't be at the charts all the time, often, right? Um, Retail traders, they often ignore this stuff, right? And institutions often manage it, right? Because like some prop desks actually reduce position size automatically after like extremely volatile days, right? And it's not because the strategy of them just suddenly changed, but it's because like traders state they change, right? Like giving gains back after winning or the inability to close the chart. Yeah, those are very common things. So this brings us to state dependent decision making. I see a few people typing, so let's just wait on the answers. Let's see. Chill7 says that just happened to me. I had a winning trade, then went back and lost half my profits. Yeah, it's a very common thing that I see happening. And it's usually a direct result of like mental or emotional capacity just being limited after indeed a winning trade, which leads you to make unable to make the proper decisions afterwards, right? That's why a lot of people have the rule in their system to basically stop trading after a win, for example, to basically save themselves from that happening. Let's see, Noisy Factor and Kido are typing, so let's see what they have to say. The part about the lower brain taking over is very recognizable. Yeah, it's basically your brain recognizing danger and then shifting from, rational decision making to emotion based decision making. Yeah, and we do indeed have a very much like an inability to fight it. It's impossible to fight it because it's just the way our bodies are like hardwired to work, right? To recognize danger and using a different system to um using a different system to save ourselves from that danger. It's indeed when the chimp starts to take over and starts clicking buttons. That's exactly it. Right, so state dependent decision making, right? This is very critical. The way we make decisions and everything, it's not the exact same way in every state, right? Our access to logical thinking depends on the arousal, right? Under high stress, our prefrontal cortex, which is the part that's responsible for logical decision making, it starts to reduce activity, right? It basically means your IQ can temporarily drop. That's the way it works, right? Our risk assessment starts to worsen, and our impulse control weakens significantly, right? So this explains the whole why did I break my rules? I never do that, You were not in your normal calm state. Rules that are written in a calm state, they often collapse in a stressed state, which means systems, they must account for state variation and not just your strategy, right? Let's see. Unrelated to the stream for today, but you teach how to code. No, I don't teach how to code. I can't even code. I'm not to himself. I'm an analyst in here, so I can't help you with with coding. I wish. No. Let's see. So where were we? The three trading states that we were looking at, right? We really looked at them earlier in the inverted U curve, right? The three trading states. For simplicity, we can classify them into three zones. First state, red state, right? Or over activated. It's usually a very high emotional charge, combined with fast breathing. We're impulsive, we're reactive, we're basically revenge oriented. Everything is urgent. And in this state, you are not trading, you are reacting. Noisy factor. That's a good question. How can one be completely logical under pressure? And the answer kind of is you cannot. And let me explain, right? When we are in this red state, right, which is like under heavy pressure, we are unable to be logical. That's just the way the human body works. We are not able to, right? So instead of trying to force being logical in a certain state, which is just physically impossible, we should focus on changing states, right? We shouldn't focus on forcing something inside a state, but we should focus on changing the state. That's the important part. What's up, Time? Good to see you in here. Great week, yeah, definitely. Hope you had a great week as well. Hope all is well with you. All right, so the important part is not trying to force something to do something while we're in a state, because it's just not going to happen, right? We have to make peace with that. But we can, however, regulate ourselves and make sure our body shifts back to a different state in which we can actually trade and in which we can actually perform better, right? So the red state, we've looked at that and we're pretty much familiar with that already. So then we have the yellow state, where we're underactivated, right? And this is boredom, being distracted, kind of looking for action, looking for setups, forcing setups, right, that aren't there, over analyzing just to make sure to see something, compromising your trading plan because you're like, I kind of could be a good trade if it goes there, if this and that, because there's nothing that's like obvious. And in this state, we're not, you're trading for stimulation, right? So in the other state, red state, it's not trading, it's reacting. Yellow state, you're basically trading for stimulation only, right? We're bored and we want stimulation. Our brain wants something. It wants a cookie. It wants a reward. So we just trade to basically give it what it wants, right? Get a quick dopamine hit in, and that's it. We're not trading for the fact of like executing our system. And then the last state, which is the one that we want to be in, is the green state, which is optimal, right? In which we're calm but alert at the same time. We're breathing. Our breathing is stable. We don't have urgency. There's not a big emotional charge. There's a clear risk assessment. But at the same time, there's also a willingness to do nothing, right? We have peace with doing nothing. We're fine with doing nothing, right? In the yellow state, we kind of don't have that peace of the willingness to do nothing because we kind of want to do something. We want to stimulate our brain, right? But in the green state, we do not need stimulation. We understand that we're just here to execute a system. So we're not here to get stimulated. We're here to execute a system, right? And this is basically the only state that supports consistency over the long run, right? And a problem is that most traders, they kind of do not check in which state they are, right? They kind of assume they're always inside green state when they get to the charts, or to the charts. But in fact, usually we're not always in the green state. It's impossible to be in the green state every single day unless you know how to regulate it, right? Because our daily lives also impact in which state we are. Let's say you trade AM sessions, right? And you have to wake up pretty early. You also have like family duties. You have a household to take care of. You have kids. I don't know, whatever. All that stuff affects how you're gonna feel when you get to the charts, right? And it doesn't say that all these things are bad, right? Because I don't have kids myself, but let's just take kids as an example. I could very much understand how people that have kids might have a very hectic morning routine, getting to school, getting them dressed, getting breakfast, all that kind of stuff, right? Leading them to rush. And it's not necessarily a bad thing, it's just part of life. But we need to understand that it could push our mental state towards a state that we do not want to be in while trading, right? So are we then going to blame anything in our personal lives? No. Are we going to blame ourselves? No, it's normal and it's the way our body is supposed to function. We just have to understand that we can switch states by regulating it, right? That's the part that we want to get to. So let's just move into that, right? Regulation tools. This is like a practical section. We move into application. It's not mindset advice, right? This is nervous system regulation, right? What's the first thing that we could do? To basically calm down our nervous system. One of the important things that we looked at in terms of science, physiological science that are there, is breathing, right? Having a very shallow or fast breathing, right? So that's one thing that we can fix, right? That we can basically alter to get back into a green state, right? So we try to do slow nasal breathing, right? 4-second inhale, 6-second exhale, 2-3 minutes. And the longer exhalation activates the parasympathetic tone, right? You cannot be physiologically calm while breathing rapidly, right? And breathing, in that fact, is the fastest lever that we can pull. It's the easiest thing that we can use and tool that we can use to change states, right? Whenever we're bored, our breathing is very slow. Whenever we're not bored, but like in the red state, our breathing is very fast, right? So what we do, we start to calm down, slower breathing, slow nasal breathing, and that makes sure our body understands the fact that we're not in danger, right? We have to tell our body we are not in danger right now. There's nothing to be afraid, scared, or nervous about, right? I'm just at a PC behind a chart, and that's it, right? You can tell that stuff out loud to yourself, and your body will actually listen to what you say. It's kind of funny. I saw a study recently about how cells in your body can actually listen to what you're saying and basically save it for the next time. Something about it. I haven't read the actual study, but I came across it. I should read it. It's kind of funny that your cells in your body actually listen to what you have to say. So, when you actually calm yourself down with words, it actually helps. The second thing you could do, but I'm not a big fan of this, it's like an adjustment of position size based on your state. So when emotional intensity is high, you reduce your size. but I'm not too big of a fan of this because personally I'm also a big data and math fan when it comes to trading systems, and adjusting position size based on a variable thing in my head, it doesn't make sense. But it's still something you could do, especially if you notice that it works for you, because it's not a one size fits all, of course. Then something else, which is a mandatory post loss pause, right? After one or maybe two losses, you take a mandatory 10 to 12, 20-minute break, right? No charts at all. No staring at the chart, not just one more, because it starts to interrupt the loop of escalation, right? Because what happens is that we tend to slip into overtrading, revenge trading, whatever, after specific losses because it breaks down our emotional capacity. So we want to take a break, distance ourselves from charts, calm down, regulate our nervous system so we can actually make rational decisions after the loss. Which usually what will happen at that point is that you actually start to be like, okay, I took 2 losses today, which is my max. I'm just gonna stop, right? Because you're now in that green state, you can make the right decisions, right? Instead of forcing decisions that are bad for you, even though you know deep inside that decision is bad for you, your body will force you to do it because it seeks, I don't know, stimulation or revenge whenever you're in the red or yellow state. Then what you could do is have cutoff rules, right? A session cutoff rules, a predefined stop time, right? Let's say you say I only trade XYZ session. Well, and you only get to be in the charts during that session, and after it you stop, right? You don't extend your session, especially not after emotional spikes. Let's say you take 2 losses or a loss and a win near the end of the AM session, and you promise to yourself, I only trade the AM session. No, it's when it's 11:30 or 12. You cannot take a setup again because it's you know you have that session cutoff rule. Because fatigue reduces the executive control that we have, right? So we want to make sure we don't get any emotional spikes after, and we just distance ourselves from the charts. And fifth thing we can do is a pre-session state check, right? We rate our state from 1 to 10, for example, before trading. If below a 6, for example, we reduce size or we skip the session. Very simple, very objective, and it's a structured way to make sure you save yourself from bad behavior, right? Or you employ one of these regulation techniques to make sure you calm down and basically get to a higher number before the session starts, right? But be very strict about this, right? Don't underestimate it. Don't take it lightly. Be very strict about this because this is what basically brings you consistency over time, right? If you can be in the right mindset and state of mind over time, that's the thing that brings you consistency along with a tested strategy, right? And the thing why this is so important is if it were just a strategy, right? Let's say you backtest a strategy over a specific amount of time and it proves to be profitable over a specific amount of time and thus has an edge. If it were easy and not so heavy on the psychological part, you would be able to just execute that strategy perfectly and therefore win over time. But for a lot of us, that's not possible because our psychological state gets in the way, right? We're not able to execute that specific we're not able to execute a specific strategy in the exact same way we're supposed to because of the psychological state that interferes with it, right? And that's what kind of breaks the data. That's what breaks the edge, right? So that's why I'd say it's state over strategy in this point, right? The core truth is a good strategy in a bad state becomes a bad strategy. It won't work. It won't function, right? A mediocre strategy in a very stable state will outperform it, right? Because you can at least employ consistency. You can at least be consistent in that mediocre strategy, right? You can have a strategy that's extremely profitable, right? A 75% win rate with a very high RR, like let's say 5 RR on average. On paper, that's a very good strategy, right? And it will be profitable at the end of the week or end of the day, month, whatever it is. But if your state is so bad, you're not going to be able to fully deploy that strategy to its fullest potential. Never, right? So a very mediocre strategy with a very low win rate and a decent RR that's still profitable, math wise, will outperform if it's executed within a stable state. So the consistency is not about finding better entries, finding better exits, better trades, better times, whatever. It's about stabilizing the machine that's executing it, right? And you are the machine. It's you. Because the trader who regulates their nervous system, they kind of have an edge that most people ignore, right? They have a different type of edge, which is they're able to control themselves completely. Any questions so far, by the way, about what we covered, what we looked at? Let's see. Let's see. No questions so far. That's okay. All right. So to close this off, the presentation, the market does not demand perfection, but it does demand stability, right? Basically, your nervous system is the hardware, your psychology is the software, and the strategy is the application, right? Let's just talk in, like, I don't know, machine terms, because we are the machine, right? If the hardware starts to overheat, the application will crash, right? That's the way it works. And we are the hardware, strategy is the application. If we overheat, strategy won't matter, it won't work. It's the same with the PC, right? If your PC starts to overheat and it starts to freeze, all the apps on our PC, they won't work, right? They're useless. So mastery is biological before it's technical, right? And in the end, the trading is not a battle against the market. It's just regulation practice under uncertainty, right? And that's what, let's see, Noisy Factor said, how can one be completely logical under pressure, right? We cannot be logical under pressure. It's impossible. That's why we regulate to change states. It's a regulation practice under that pressure. And the trader who can regulate their state can regulate their execution at the end of the day, right? Let's see. Any questions that we have so far? If you want me to look at a specific case, if you want me to look at a specific situation, how you can handle specific things, how to deal with specific emotions, how to deal with specific behaviors, let me know. And we can talk about that. It's very interesting to have a case study in the live as well. Not taking profits. That's a very interesting one. Rooted in many different things, or could be rooted in many different things. Could you explain a little bit more about not taking profit? What's the context around it? Is it like scared to take profit, or are you like greedy to take profit because you want more? Yeah, what's the context behind not taking profit? Because it could, or it forms itself in many different ways, and there's many different ways or origins for it to exist. What's up, X? Love the stream so far. Thank you, man. Appreciate it. You think it's more greed, wanting more out of the move, or the fear of missing out, believing it can keep going for more, and I want to be involved? That's a good one. It'll be up 6 to 8K on a 50K XFA and you did not take it. That's a lot on a 50K. Wow. That's that's more than 10% open profits. Yeah, I get where you struggle with not, where you want to fix this. Okay, so first things first. We gotta kind of dig deep down into you, right? You want to basically want more out of the move, or you're FOMO believing it, right? Do you have any backing data that tells you, or any rules surrounding taking profit, right? Or is it like very dynamic and it's different every time? That's the first thing we need to look at. Strategies, right? Okay, use standard deviations for profit taking mixed with certain time-based exits. And do you have any rules surrounding the amount of risk to reward you have to take, or maybe a monetary value that you need to achieve? Right? Like if you trade props, some people have like mad consistency rules, and they need to adjust their profit taking based on that. Okay, you do have a max loss. Okay. Daily loss limit. Yeah, okay. So, okay, so you do have some rules in place. Now let's look at the fact about, you think it's more greed because you want more out of the move, or you believe it can keep going for more and you want to be involved. What is the reason for you to want to be involved in a certain move? Right? Because what, let's say there's a move going on, you are inside a trade, you're up a significant amount, and you're basically already at the point where you should take your profits according to your rules, right? Because maybe standard deviations are hit and it's your time-based exit. Why? What's the underlying reason for you to be, or you to want to continue holding open that trade? Because see it like this. Whenever your target is reached, holding on to your trade exposes you to extra risk, right? Because you're not only risking the initial amount, but you're now also risking the profit that you should have locked in, right? So it's extra risk that's open for a minimal amount extra, right? So let's say you have 6 to 8K open in risk, but you're aiming for $400 or $500 extra or $1,000 extra, right? The actual risk you're taking is no longer the initial 400 or 500 max loss, but it's actually you're risking 6 to 8,000 to earn 1,000, right? So you have a 6 to 8 or 6 to 8 to 1 ratio. That's how you should view it from there, right? So what's the underlying mental reason for you to want to take part in that extra piece of the move? Let's dig into that. Okay, you like catching the distribution of the daily. Okay. But let me ask you a question, right? Um, why do you like catching the distribution of the daily? In the sense of, is it rooted into proving to yourself that you can do that you have the ability to do it? Or is it a, like a validation type thing? Or you want to, you're able to show people like, hey, I took the whole distribution today. Or maybe you don't show trades, and that's not the case. Could be, or could be validation of the self, right? Attaching validation or value to being able to catch the entire distribution instead of just the piece of the pie. That's one thing it could be rooted in, and I'm just naming these things because these are very common things that I see with people. And I don't know you personally, so I can't pinpoint what it is. So I'm just naming things that could be it for a lot of people. Or is it rooted in, you know, um, seeing the extra money and being able to therefore work towards a certain goal, right? Um, try to dig into the reason why you're actually wanting to take the entire move instead of just the piece that goes towards your profit target. You think if you can't justify it, that says something. You don't know. It does. Yeah, that's a good thing. Well, not a good thing, but it's good that you can be aware of the fact that you're not able to justify it, right? And this does open up the opportunity for you to dig deeper into yourself, right? Because most likely it's a inner thing, like right inside, like deeper inside of you. There's a reason that, um, yeah, okay, you think it's because you believe that you have the capability to do so. Exactly. Um, the most simple analysis that I could give you of this, that a lot of people have, is um, it might be rooted in, yeah, it's not about showing off exactly, because I don't know if you share traits. I don't know. Um, you believe you have the capability to do so, and therefore you need to prove to yourself that you are able to do it. Right? It's the same as someone that spends a lot of time doing their analysis, right? And it kind of leads them to, having a lot of time invested, and therefore wanting to be right and wanting to prove to themselves, I have the capability to do a good analysis on a trade or on a chart. And then they force a trade, they hold open a trade or whatever, or they go against, or they can't accept the fact when they're not right, just because they spend time doing analysis, they spend time learning, they spend time refining concepts, and then they want to be rewarded for that, right? By showing to themselves, you see, I have the capability to do it, right? Even though the rules that you made earlier, they do not require you to have that capability, right? They only require to have, let's say, 75% of the capability, because you have certain rules that, dictate that you should get out of a trade, right? It could be like the standard deviation, for example. It's hit, so according to your rules, you should get out. But because of the predefined assumptions you have about the capability to get the entire range, you hold open, right? And that's like a slightly an ego thing, right? About where the ego wants to prove to itself, you see, I have this capability and I can do this, right? And then you're no longer acting according to your system, but you're trying to feed that ego that's kind of taking over, right? And to take it a step further, the human ego is just a wall that we build up, right? It's a wall of protection to protect us against the feelings of a deeper insecurity. That's just the thing an ego is, right? Everyone has certain insecurities, everyone. And they end up in certain ways. Our body protects ourselves against these insecurities in certain ways, and one of them is the ego. It builds up a wall around us to protect ourselves from feeling that insecurity. And in this case, it does look like, or it could be, the fact that, your ego wants to be fed by showing to yourself that you have the capability to take the entire distribution, that you have the capability to do X, Y, and Z, right? So the key for you to basically fix this is to dig deeper into yourself and ask questions like, okay, we understand that this is just a defense mechanism in our body, right? It's not something bad, it's not something negative, it's a defense system, right? And then we want to ask ourselves, okay, what are we defending? Why are we defending something, right? And once you get to that point, right, yeah, do we need the whole distribution to make a living? Definitely not, right? You could use 10 points, for example, and be fine. So the way for you to go about this is to ask those questions to yourself, like, what are we protecting? Why are we protecting it? Right? And this could be, I'm saying could because I don't know you personally. It could be like a case of a deeper insecurity that's rooted in, um, for example, not feeling good enough, or not feeling, or seeking validation, and not from other people, but maybe yourself, all right, or whatever, right? And once we start to understand that, you know, getting to that deeper rooted fear, then we can slowly bring down those walls, right? Bring down that ego, because we start to learn and understand that there's nothing to be afraid of. There is no value in, forcing to take the whole distribution instead of the part that we are allowed to according to our strategy, right? Because it doesn't, you're not, how can I say, more valued because of that, right? Your value does not lie in the external. The value is within, right? And once we actually understand and know that, and we actually believe that, that ego starts to basically slowly disintegrate, and then we can make the proper decisions, and we, suddenly do not have the need to take the whole distribution anymore, right? And that's how we can fix that not taking profits part. You sent me a DM? Okay, I will check it when I get back. Thank you. I think he sent me a DM. Oh, the trading rules. Yeah, what are the trading rules? Whose trading rules? Mine or Times? Both. Okay. Well, what trading rules do you want to know? Regarding time of day, mental state, etc. Well, I swing trade mostly, right? So for me, it's like, the mental state is slightly less relevant because of the slow aspect, right? Because if I take in a position, it's gonna be there for like weeks, right? So usually I build a case, you wait, you wait, you wait, and then you just have to execute on it regardless of the mental state, right? Because I don't get instant feedback. With day trading, you usually get instant feedback, and with instant, I mean within the same day, which triggers the mental states and everything a lot faster. Like I could take like an hour and be like, okay, I don't feel like it right now. I take an hour, do something else, and then execute, and it won't make a large difference usually, right? As for someone that's day trading, if you take an hour break, usually it's like a different kill zone already or something, right? But it's a good question regarding mental state, definitely. But good question, Guido. Thank you. You need to go. Oh, well, thank you for being here, Wizard Blue. I saw you were here since the start, I think. So thank you for attending. Really appreciate it. You feel like the longer you look at charts, the more nervous you get or bored. Well, that's exactly what we talked about today, right? When you're at the charts for a long time without anything, it kind of, you get bored and your brain wants some action. You want to do something, right? And then you get bored and people start to do things they shouldn't because their brain seeks a form of stimulation. Do I believe in implementing technical constraints like a max loss on a platform, and do you believe a trader should master their nervous system completely? I'd say work towards um, mastering your nervous system completely, definitely, because it's just a good thing to do overall. But yeah, use those technical constraints for sure, right? Because let's say there's a day you cannot regulate yourself, something bad happens, and you're just unable to, right? Then at least you have like a fail safe or a switch that's behind you that saves you from doing bad stuff, right? Which is the max loss and just locks you out from everything. And at least you're not able to make mistakes, right? And these max losses also help you with mastering to regulating your nervous system. They complement each other exactly, because what happens if you hit max loss and you're locked out, right? Usually maybe you would start to overtrade or revenge trade, but now suddenly you're forced to do nothing, right? You're forced to sit in the discomfort. You're forced to basically stop, right? And that's the point where your body starts to understand, like, okay, it's okay to sit in the discomfort. It's okay to not do anything. It's okay to not try and get rid of the bad emotions that are inside right now and just let them sink in and leave on their own, right? Because you cannot actually do something, right? So you can let the frustration go without self-destructing, right? So I'd say it helps you regulating your nervous system over time. So like time says, they complement each other wonderfully. Well, thank you guys for attending. They're relevant and helpful, yeah. But I do want to ask you guys one thing before we're done with this, right? I want to ask you one thing, and that is, I've been creating these myself, right? All the presentations, all the information in it, and whatever, and also come up with the topics, right? But maybe there's topics that I haven't talked about yet that you guys find helpful. Maybe there's topics that you guys struggle with that you want information on, and you want to be, or you want to learn about in great depth, right? If you have any specific topics that you'd like me to cover in the next installments of these trading psychology streams, let me know. Put them in the comments here and I'll write every one of them down and make sure to create a presentation for each of them, or if they can be combined into one, I'll put them into one. So there, right? If you put them below there, we'll make sure to I'll make sure to create presentations on them, because at the end of the day, I create these presentations and streams also to help you guys. And if I can tackle specific situations that people have, specific issues, specific behaviors, I think that would work wonderful, because then we're able to help people specifically. Also able to do it in DM if you do not want to, share anything publicly. You're also, you can send me an a DM, and I'll make sure to keep it private and integrate it into the stream without naming you, of course. Real-time examples of indicators in use in addition to the psychology would be great. We're definitely doing that. You should check out Josh's streams for that as well. And I'm going to be doing tape reading streams as well, where we're going to use the indicators in live markets to analyze the opening bell, for example. But I'd say definitely tune in to Josh's streams as well. Definitely do it. A risk management stream. Oh, that's also a very important topic. Different ways to employ risk management. If you missed the stream, don't worry. I'm going to be uploading it to YouTube right after the stream is done. So